This is a quick series on why I will never pay off my mortgage, and how it might make sense for others to do the same. Check out the video description or top comment for the series playlist. Subscribe for more content like this. We focus on unconventional strategies to accelerate wealth growth. Alright, so in this video we're going to walk through why I will likely never pay off my mortgage. I will likely continue to do something like cash out refis over time, and it sort of centers around a couple of things. One of which is based around this rule of 72, and the other is the fact that I can get better returns than I will have by paying off my mortgage. And that's almost guaranteed. So let's jump into that with the rule of 72. So what does this rule mean? Well, basically when you take a return and divide it into 72, the number of years for that return to double is what you end up with. So with all of that considered, the rule of 72 is basically a rule of thumb kind of rule that you can calculate how long it will take for a given return to double your money. Now this also can be applied to inflation. So when it's sort of the opposite. So it actually, when you are trying to calculate inflation, and specifically with regards to a mortgage, well, let's take a look at my actual numbers right here. So for my current primary residence, this is a house that I probably will hold on to for the long term, even if I'm not living in it personally. But this is what we're looking at. My current principal, or the most recent payment, $833, almost $834 went to principal, and $737, almost $731 went to interest, for a total of this $1,564.65 is my current mortgage payment of principal and interest. So when we factor in the rule of 72 with 3% inflation, that means that this should effectively cut in half every 24 years. That doesn't mean that the amount that I'm paying is going to be cut in half. It's the effective amount. So in 24 years from now, when we calculate this out, my mortgage will feel like $782 considering in today's dollars. So that's, if that sounds like, you know, it's really cheap, it is. It's significantly lower than people pay for stuff these days. And it might be more than that, because in between now and then there could be an opportunity for me to cash out refi, to do something else with those funds. You know, I may not, but at least with my current state loan, I will not pay off this mortgage because I have a rate of 2.25%. That's easily, I can beat that with actually a guaranteed amount that's higher than that. I don't come from wealth. I spent almost 9 years as enlisted Army infantry. I have no college degree. I've been investing pretty much my entire adult life, and there are things I wish I knew about years ago. Too many finance channels and forums focus on the same tired things, and I'm not saying you shouldn't do them, but I am here to show you some more tools to succeed. Drop a like if you found this video helpful, comment if you think I'm crazy, subscribe if you want to grow with me.